Hello and welcome to another episode of Money Monday with Malu. Thank you for joining us once again. Last week we were looking at the importance of financial discipline, how one can attain financial discipline, and some of the common mistakes that we make with money. Today I want us to discuss a topic that confuses a lot of entrepreneurs and business owners. That is differentiating between cash flow and profit. Many businesses believe that as long as a business is generating profit, making sales, then there should always be money available. And yet, profitable businesses find it very hard to pay rentals, pay their employees, buy stock. You may wonder, why is that? Well, the answer lies in understanding cash flow. When people don't understand cash flow itself, they face the aforementioned challenges. So, for today's topic, let us begin by understanding what is profit. What is profit? Well, profit is the amount of money that is left after you subtract your expenses from the money that you've generated. For example, if a business generates about 100,000 and the expenses cost about 80,000 and they're left with 20,000, therefore the 20,000 is considered as a profit. But then, with profit, it is only recorded on paper. It does not necessarily mean that your business has that money. So what is cash flow? Well, cash flow is the money that moves in and out of the business. This basically answers the question, how much does my business currently have? So knowing what money is moving in and out of the business helps you understand your cash flow. From what I've explained already, so we've already seen that profit is only recorded on paper. It's not money that you have yet. Quite right, a business can be profitable on paper, but if the money hasn't yet been deposited in your account, then you do not have any money. Cash flow. Cash flow is the actual money that a business has, money that moves in and out of a business. Let's look at a practical situation. Let's say you own a wholesale business and your client buys goods worth 100,000 and you bill out an invoice that is 30 days payable. So on paper you have made profit, but in real life you don't have money yet because the client hasn't yet paid. However, you still have to pay your suppliers, transport costs, your employees still have to get salary. So your business is profitable on paper, but you do not have money. And this is a challenge that many people face. Cash flow challenge. Not knowing when the money will come in or how much money is going out. How then can you manage your cash flow? Well, there are 3 practical tips that I can give you. 1, you have to track your income and your expenses. 2, you have to encourage your clients to pay on time. 3, you have to plan ahead. Plan ahead for instances like this where a client decides not to pay there and then, so that you can know how to manage such a challenge. And why, you might ask, why is this important? Why is cash flow management important? Well, when you have a healthy cash flow, you'll be able to pay your rentals, your salaries to your employees, you'll be able to buy stock, and you will take advantage of growth opportunities. So, all in all, how then does Malu Capital come in? What role does Malu Capital play in this whole cash flow profits topic? Well, here at Malu Capital, we believe and we understand that our clients do face cash flow challenges, and that is where we step in now with our financial solutions, which are designed to help your business continue operating and seize growth opportunities. So don't hesitate, come to Malu Capital, find yourself a solution that is feasible with you. And that is all for today for Money Monday with Malu. Don't forget to subscribe, like, and leave a comment in the comment section. Share your thoughts on what you think and how a business can be helped out. Don't forget to subscribe. Ask Malu, how can a business access a loan?